First time home buyers, should you stretch to buy that first house? Well, if you're new to the channel, if you're not, say it with me. I'm a mortgage lender licensed in 48 states. My team's one of the top purchase teams in America. Yes, we want to be your lender. Check out my reviews, get on the calendar, call me, 707-478-0637. Here to help. Okay, let's get on with it, right? I've been doing this for 17 years. Yes, 17 years. And look, I've always been a very busy lender. I came into the business during the foreclosure times. I worked at a bank where I would have to pre-qualify everyone who was trying to buy a foreclosure. So I've always been talking to a lot of buyers. My business has always been focused on buyers. Do I do refinances? Of course. But there's some lenders where that's like 90% of their business, okay? 90% of my business has been buyers. And talking to people, like, if you watch this channel or if you've talked to me, you know I like to talk. I like to ask questions. I'm super curious. I want to know everything. And that is why I'm saying, based on everything I've heard over the years, based on how I know the math is done, based on the cost that people don't think about, I don't think you should stretch. So let's talk about why people tell you to stretch and then what my concerns are with that. And then if you go through the concerns and you go, okay, that's not a problem, that's not a problem, okay. But if you go through the concerns and you go, don't do it, okay? I'm telling you this right now. I say it in a lot of videos. No house is worth being house poor, okay? Beyond not having a life, being house poor brings such a level of stress to your life that it can affect your relationships, it can affect your health, it can affect your job. It is not worth it. I cannot stress that enough. If you watch this channel for a long time, you know it happened to me decades ago. I still haven't forgotten, okay? Okay, so who will say, oh, you should stretch, you should stretch. Sometimes it's your parents, okay? And that one's always interesting to me because if my son said, should I stretch? I would say absolutely not. And sometimes parents will say, well, you can stretch and I'll help you, honey. You know, if you get stuck, I'll help you. Here's the thing, how much can they really guarantee they'll help you and for how long? A lot of times parents have the best intentions, but they may not have the assets. Or even if they do, you could be putting them in a bad position with retirement. So really stay away from that one. Where we hear it more often is real estate agents. A real estate agent will say, oh, it's your first house. It's normal to stretch. Okay. Here's the thing. A lot of times people get into that first house and they have the mentality of, well, this is just my first house, so I don't have to love it, you know, and I'll move in a couple years. That's not always what happens. You know, think about 2020, 21, and 22. I have a lot of clients personally who thought it was going to be their first house, but now they never want to sell it because the rate's so good, right? So the house that you're buying, you know, you want to look at it as, hey, if I get stuck here forever, will I like it? And that's why a real estate agent will say you should stretch, is because their thought is that if you get stuck there, you're going to be happier if you're a little bit nicer than you really, you know, responsibly should be right now. Okay. That's the theory behind it. A lot of times people go, oh, it's these greedy real estate agents. Generally, it's not. It's just they want you to be happy. And, you know, let's say that you are buying a 2-bedroom, but you could get a 3-bedroom for 10 or 15K more, and you have one child, you're thinking of having another. They might suggest stretching, you know, in a situation like that. But here's the thing. All of this comes down to math. And I think that when you're buying a house, it's so easy to get stuck in the emotional loop of like, you know, and this person's telling me this and I should do that and my parents, and it's like, whoa. Whenever we start getting emotional, we need to get out our calculator. That's right, a calculator. Hey, for anyone born after the 90s, this is a calculator. Anyways, so yeah, you want to get back to the math. So here's what I would suggest you think about. Okay, number one, how much are you paying in taxes, right? There is such a huge discrepancy based on what state you're in, right? New Jersey income taxes versus Florida are very different. California versus Georgia, Tennessee, South Carolina, everything's different, versus Illinois, right? So lenders, when we're qualifying you, we don't look at state income tax. So if we have a program, let's say the max debt to income's 50%, that's off of your gross income. So that's off of the number before all these taxes. The lender's not taking into consideration how much you're paying in state income tax. And depending on where you live in your income, that could be 10% that's not coming into play in our world. That's why it's so important you do the math. So I did another video about this recently. If you're thinking of stretching, I want you to look at your net pay stubs versus the proposed payment, and I want you to do a budget, okay? That's number one. And if you're like, I don't wanna do that, don't stretch. Don't stretch, period. The second thing to consider is, do you live in a state where the homeowner's insurance is likely to increase? Most states, the answer is yes, it's likely to increase right now. Certain states like Florida, wildfire areas in California, I'm telling clients, hey, let's make sure that you're comfortable if this goes up another 20, 30, 40%. So you don't want to end up in a position where you're already stretching, pushing yourself to the max, and then a homeowner's insurance bill gets increased, which is very common right now, and you're hosed. Right? Same thing with property taxes. You want to know how the property taxes work in your county. There's some parts of the United States where the property taxes are capped at a percentage if you live there. And then there's others where they're not. So you really want to go into this with your eyes wide open, because what feels like a stretch now could actually be I'm trying to think of something appropriate. I was going with beheading, but that's a little graphic. It could be a bankruptcy down the line. A stretch now could be a bankruptcy later if you're not taking into account your net pay and how likely taxes and insurance are to go up. If you're in a condo, HOA, those are gonna go up. Just accept it, okay? And then the third thing is people go, I hear this a lot and it kind of drives me crazy. They go, oh, well, you're young, you'll make more. Not necessarily. There's certain jobs where you can be capped at your top pay no matter what your age is. How much you make isn't necessarily correlated with age. It's correlated with the job you have and what the max for that job is. And I don't understand why everyone else isn't talking about this, right? Because I look at pay stubs every day and I look at what people get paid. And if I look at over the last 10 years, it's not like wages in America have been going up dramatically. Research it. It's sad. It's tragic. There's many parts of the country where the minimum wage is still under $15 an hour. It's not good, guys. So, and I made this mistake. Well, my ex-husband and I made this mistake when we were very young is, if you guys know my house poor story, right? Agent goes, the house was more than we were comfortable with. And she's like, oh, stretch. And my ex was like, it's perfect. And I was like, I didn't know anything. I was like, I knew nothing. I wasn't in the mortgage business. I was a stay-at-home mom, who was enjoying her baby, who was an angel. So they told us to stretch and we're like, okay. And we're like, well, my ex at the time, we're like, oh, he's going to get a raise, right? The economy changed. The economy completely changed. That raise went away. Right? And I saw this happen to people 2008, 9, 10, 11, 12. Whenever we hit a recession, you're going to have the first thing that disappear is bonuses. And then it's overtime. So it's right now, if you're getting qualified for a mortgage and you're counting on a potential bonus in order to afford the payment, don't buy the house. Don't do it. Don't do it. Right now, if the lender's using every single drop of overtime and you're in an industry where if we hit a recession, that could get cut, don't do it. Don't do it. The other thing to consider is family planning, and no one talks, we're probably not supposed to talk. If I'm breaking a law by talking about this, I'm sorry, but someone has to say this. I don't think I am. legislation around lending is crazy. But look, if you're planning on having children, right, you need to start thinking about childcare costs. And I say that because, we actually lost someone on my team recently. Tegan, if you guys ever talk to Tegan, she's amazing. We lost her because her childcare in Indiana was going to be $1,500 a month for one kid. This isn't a private nanny, right? And when her husband and her sat down, it was like, okay, unless she was in a position where she was making this huge amount of money, it just wasn't worth it, right? It just wasn't worth it. And that's what you have to look at, because the last thing you want to do, and I recently had the situation with a friend who was working with another lender because they were related. Anyways, they were stretching to get into this house and 2 incomes, and they want to buy this house and then have kids. They want this house for the kids. And I'm like, guys, you can't afford childcare. Like, how is this going to work? Right now, you need every drop of income to feed this house. If you buy this house is your baby, right? And that's the thing. And if you have family members that will help, fantastic. There's all these news articles right now. Why are Americans not having children? They can't afford to, right? In many cases, you can't afford a house and a child, right? Especially if you're stretching. If you're not stretching and if you're planning, you've got a good chance of it. But if you're, not thinking 2, 3, 4, 5 years ahead, and you've got an agent pushing you to stretch and a lender that just goes, okay, okay, that's my robot. Yeah, whatever you want, sir and ma'am. I'm not going to ask any questions that encourage critical thinking that will help you in the future. You can end up in that position unwittingly, right? And look, beyond family planning, there's other stuff too. There's healthcare. I've got a lot of clients with animals right now where these animals have very expensive monthly costs. And I'm like, hey, do a budget, because it's not like you're going to let your dog or your cat perish. If you're spending $600 a month on your animals, it needs to be budgeted in. So here's the thing. Do I think you should stretch to buy a house? No, I don't think you should max qualify. Let's say your debt to income's really, really low and you're really good at saving money and you budget it out and you can afford it comfortably. You just wish it was less. That's different. That's not stretching. Stretching is where you're already at a higher debt to income. You're at where you're already nervous, right? You're already uncomfortable. We've all had that feeling with a payment where we're like, okay. And that's pretty normal with buying a house. It's a little scary at first, right? But my advice would be don't stretch unless you do the steps, right? And I'm going to try to remember what they are because we all know I do this unscripted. Number 1, look at your net pay. Okay. Let's get real about where you live. Number 2, property taxes, insurance, and HOA. That's right. Talk to your county tax assessor. Really get real with your insurance provider. Hey, and look, I was in a meeting this year where literally, we were told, hey, you got to start prepping people because these insurance companies aren't playing. This stuff's going up. And then 3, what's coming down the line that's going to be expensive? And with what's coming down the line that could be expensive, is the house more important, right? So that's what I would advise. If you guys have questions, comments, if you want help planning, if you want to work with a lender that's going to ask you all these questions, that's us. Please reach out. I'll have a link to the calendar in the bottom. You talk to myself, Sandy, Linda, Alyssa. We're here to help you guys. Whether you're buying a house now or 5 years from now, reach out. It's always free. We're here to help. Thanks for watching.